All right, we should be good now, hopefully. Let me just double check real quick. All right, we should be good now, hopefully. All right, we're definitely good. All right, I hear myself on YouTube. Perfect, perfect, perfect. All right, we are definitely good now. Let me make sure everybody knows, and then we can get started. Perfect. All right, what's good, everybody? Good morning, good morning, good morning. I apologize about that. For some reason, like, there's always something that goes wrong. But the yes, sir, was good. Tony was good. Everybody. Yeah, I the first streaming service that I was using, for some reason, just did not want to work and connect. And then for some reason, my mic just did not want to work either. But we are good to go. Good morning, everybody. Hopefully, everybody had an amazing holiday, an amazing Christmas, an amazing New Year. It's very important that you guys spend time with your family, kind of decompress and get right back to it. I did the same. I was able to really enjoy my holidays with friends and family. So kudos to you guys. Appreciate every last one of you guys as well for being on. Even at today, January 2nd, it's no other different day. You know what I mean? We still got to grind. We still got to make this money. So might as well do it all together. So real quick, if you guys can, share this with somebody, because what I'm going to be doing is, now that I have everything situated with our auto trader, making sure that the platform was good, now I can actually go ahead and dedicate a lot of my time to these lives and really dedicate my time to people who genuinely want to learn how to trade. I think that's the most important thing, really teaching you how to trade, and just really being able to be transparent. I'll be going ahead and marking up charts, looking for positive or potential trade opportunities that myself and students will be taking, and that I will also be placing for our auto trader and just for my personal self. You know what I mean? So I'll be sharing that insight, and also really giving that information back, and hopefully with the markups and the education that you guys get here, not only will you be able to learn, but you'll be able to make some money with those too. You know what I mean? So if you know anybody who could benefit from that, that'll be awesome. So what I will do is obviously answer any and all questions that you guys have as well. I am taking a look at the chat, so if there's anything that you guys have, feel free to let me know, and I definitely got you guys. So yeah, let's get started. For my legacy students, good morning. For everybody else, again, good morning. I appreciate you guys just as much as well. Real quick, if there is any markets that you guys specifically would like to take a look at, again, let me know and I will go ahead and mark that up. Also, just as a disclaimer, there's probably not going to, or for the most part, there's not going to be any trades today, because we are in a bank holiday for the majority of all markets, especially the U.S. market. Because if we go actually to a smaller time frame here on gold, you can see here that there's basically no action, right? If I'm correct, it's probably even closed at that point. Yeah, it should be actually closed. And if you go look at the majority of other markets, they're really not moving as much, right? Like if we go to AUD/JPY or a yen pair, you can see that the volatility really isn't even there. I don't even think it looks closed too. Like I think if anything, they probably are closed as far as bank holidays are concerned. I think the only thing that's really moving are cryptos. I just saw Euro USD move a little bit, I think, and GU. So yeah, there is some movement, but it shouldn't be, right? It should really actually, it basically looks closed. But even with the small amount of movement, we can identify future trades. What can happen later on this week. So that's exactly what I want to do. I want to start getting prepared for what the market is going to have for us, as the market is now open and ready after the holidays. The one thing we also have to take into consideration is that this week is going to be NFP on Friday. So a lot of the volatility and the opportunities that we'll probably start seeing will happen after Friday. So coming into next week, they're probably going to be the better opportunities, but you never know. As the bank holidays are over tomorrow, we can possibly find some opportunities. So we'll look at those together. Really look for the best I say opportunities, so that way you guys could try to make some money off of those as well. But let me go ahead and go back to gold, because this is the market that I trade a lot. And I also want to make sure that I understand its entirety, because this will also reflect what the US dollar is doing, right? It's important that we understand the correlation between gold and the actual dollar, right? Since it is our reserve here in the US, because I know everybody be watching from all over. Every time that gold increases in value, meaning that it is bullish, that means that the US dollar is decreasing in value, and vice versa. When gold is decreasing, when it's selling, that means the US dollar is actually important, or not important. It's gaining more value. The US dollar is stronger. So what I want to do is get a general idea of this entire market. Now, obviously, I can't do that now because there is no initial movement, and I don't want to start looking at this like where it's at now, because as you can see here, there's nothing. But what we can do is go on to a higher time frame and really get a strong understanding here and see what this market is giving us overall, because this could start weighing down the true nature and the true behavior of what this market intends on wanting to do. So what I need to understand is what happened before. I need to look left to get right. So what I'm going to do is I'm going to identify the fact that, yes, we did reach these previous highs. After all this selling, we were able to reach this structure. So we're just going to put this as strong structure. Nothing crazy, no fancy words, no confusion, strong structure. All right. And this is just so that way we can identify in the future if the market was to ever come back here. Let's say if it starts to buy and we reach that point, we could obviously get a strong idea for a potential sell. Why would that be? Because when we're here before, it sold. And the same thing when we came here before, it immediately sold off. And what we can also take note is that the market was not able, if we go from, I'll actually get rid of the structure real quick, so that way the trend line, or what I'm trying to give you a visual of, is accurate. I got to remember to get that again. So this is not supposed to be the most accurate trend line right now, because if anything, I mean, a lot of people would just put a line there. That's not even a trend line. It's pretty much equal height. You can cut through the wicks of a candle when you are drawing with your trend line. So for me personally, I mean, a lot of people put it here. I think me personally, I put it right there at the high of that candle. And eventually, if this market did in fact come there, that could be a potential trend line. But for me, what I'm trying to look at is the idea that we did have a high point there, but we couldn't close above those highs. So we're already getting a lower high. The market's starting to lose that previous bullish momentum. If we look previously, like that was a strong bullish move that entire time until it started losing a lot of that movement. So what we can see is, again, the same concept. Even though we still have a lot more time for this market to develop, we also are getting a lower high here. Now, in order for us to get a strong idea, like, okay, is that in fact truly a lower high? We have to make sure that it's being created, or the lower high rather, is being created at a significant level of structure. That's always going to be the deciding factor in anything that you do on any time frame. That structure and also the confluence that comes within it is extremely important, because the confluence is going to tell you what's exactly going to happen. Candlesticks are great to use in structure. Obviously, we'll have to allow them to develop. So let's see real quick. Obviously, we have this trend line, which is extremely important, right? Because again, we have to create these things, these lower highs, these lower lows at these significant structure points. And we can see right now at this dynamic support being this trend line, right? Dynamic support being because it's moving with the market. Static is when you just have a regular structure like this, support and resistance. So our dynamic support, our dynamic resistance rather, because it has broken below the bullish trend line and is now acting as a level of resistance. If we look left to get right, was there more structure here previously? Somewhat. A little cluster of it. So we can also identify, let me make sure that I get this right there. There we go. just making sure that the charts are accurate, because I will be posting this in the Discord for you guys. So that way you guys have a strong sense of what we learned, right? You have the idea, you still have the visual of the market that we went over, and also just, you have that confluence if you mark it up on your own. So we can see that this is in fact a strong level of structure. We have our, I hate these little pop-ups. We have our market that has reached the break of the trend line and has retested it twice, because as you can see here, there was a test after it broke, and the market can come back and retest that initial trend line to make a deciding factor and ask itself, do I really want to respect this area? So we can also see here, I'll just duplicate this, clone, and we'll put this right here as well as strong structure. Now, the one discrepancy that I do have is I can't necessarily put a Fibonacci, measurement on this as of yet, because what we are looking at, and I know a lot of people might be like, well, that's not a good idea. This is already an impulse, and that's already a correction. There's a move within here alone, right? But I can't go ahead and take a fib. I know a lot of people might be like, yes, you can. I personally do not like doing that, because I feel like it's giving you the wrong measurement, the inaccurate move. A lot of people would say you can go from these swing highs to this swing low. I personally don't like that, only because, again, you already had that impulsive move, a correction, and then another impulsive move, and it's already broken above that previous level of correction, right? Because if it already created a high point from here, I don't necessarily think that the fib would be the most accurate thing to use. So I'm not going to use it here. We're going to simply just use the trend line and the structure and the time frames, right? The reason why we're going to use our time frames is because this is what it's called, time frame confluence. I mean, there's really there's no guru or like special scientific word for it, but just to give you an idea, we're going to now identify different time frames to confirm the idea that right now it does seem as if gold may be in a strong sell area. So we're going to put strong sell structure. So strong sell structure, because right now we are at a level of current resistance on both spectrums. Level of resistance on the static end, right? Just a regular resistance. And then you can also see our dynamic support and resistance, or resistance rather, being the trend line, because we have a break of it. So since we have retested it, that is also going to give us further confluence. Now what we will do is scale down to a smaller time frame and get even further confluence. Now what I will do is I'll get rid of the structure, so when we look, our candlesticks are just like in the yellow box. What we can also do is, and I don't like calling them bullish or bearish, because I've seen a lot of patterns that are supposed to be bullish patterns, and a bearish patterns and a bullish, but we do have a sense of a breakout pattern here. Trying to make sure I get this trend line accurate. So what we can do, and I'll get rid of this trend line real quick. What we can do is allow this market to give us even further confluence, because right now within this consolidated market, because it's very choppy, there's no volatility. What ends up happening is within these breakout patterns, you can see that they end up getting to, and I'll kind of like draw it out. Actually, yeah, I could do it from here. I'll just extend this a little bit. So what ends up happening is, and I use this analogy a lot, it's like a catch-up packet, right? I don't know if you guys were like really bad kids like I was, but what ends up happening is, you ever twisted a catch-up packet so much that the pressure, it gets too unbearable and just pops, right? That's the same thing with these breakout patterns. When there's, I wouldn't say a lack of volatility, but the majority of the time what you end up getting is with these breakout patterns is exactly that lack of volatility for the market to actually make a strong move. So what ends up happening is it just creates, it'll end up probably still going in the same, the bullish direction that it's been going in for a while now. But what ends up happening is it gets so condensed and the pressure gets so unbearable with these breakout patterns that it does exactly that, breaks out, and extensively at that. So for me, what I'll be looking at is not only just this breakout pattern, but where the breakout pattern is being formed, right? The reason why I deleted the trend line and the structure is so that way you guys didn't also see that confluence. But this breakout pattern may be respecting also this level of structure and also the trend line that basically looks like it's a part of this pattern, but it's respecting at that significant structure point, right? Strong structure. Now, what we also can do on this time frame, and this is not looking over here. I mean, we can if we wanted to a little bit. Let me actually see. Yeah, we can actually. This is, I would consider, a pretty significant structure point in a sense. I mean, it's a whole zone. If we really want to get technical, I do not ever mark my structures up that big, ever. But I'm just taking into consideration the lows here and like the lows of the wicks and the highs of the candles. But I never draw my structure like that. That's why I'm using this little line to see where specifically in that zone is respected. But I'm really just looking at this area here, the current standpoint. And what we're looking at is it can't so far break above. I know a lot of people will be like, but it did with this candle. No. This right now is Sunday's candle, right? Or actually, no, this is still part of yesterday's candle, if I'm correct. Yes, it's still, if I'm correct, still part of yesterday's candle. So this is the last time the market was actually open. So for me, this is still a very strong structure point. I hate these little things. This right here is another level of resistance, just here on the daily time frame. So I'm not going to put another strong structure there. But what I'm doing is I'm adding the probabilities of identifying a strong area for potential sell. Because let's say this market did in fact start to sell from this point. We go from these highs. The next real structure point is to those lows. That move is significant. And not only just because you could place one entry from it and catch it all the way down to here. That's the first target zone. That's not, counting the fact that if it breaks lower, we can even reach here. It matters because what we'll be doing is, one, we could trade gold to the downside, how many ever entries we can identify, not even just to here. What we'll also be able to do is get a strong idea, which we'll take a look at actually in a second, is other US cross pairs like GU and EU and USD-JPY, because we're going to get a strong idea of what the US cross pair or the US market is initially doing. Is it gaining value or is it initially losing value? But right now, I do think that, especially after the holidays, a surplus, if you will, because everybody's spending money, and that goes for all economies. I do think that we'll start to see the US dollar kind of increase in a lot of value. That's, I wouldn't say notorious after the holidays, but that's been a pattern that I've seen after the past few years, as far as like the reopening of the markets after the holidays. But what I will be doing now is scaling down to the 4-hour time frame, and I'll just get rid of everything so we make it nice and clean. So again, we really can't consider much of anything here, pretty much, because that's not real technical analysis. That's the market just kind of moving since it's open at the time. You know what I mean? But there really is no volatility. But again, we're going to identify this level of significant structure. Now, it didn't break above. I'm not really considering this whatsoever. This candle here that has broken above my little zone. I'm just identifying this structure point. It cannot break above. The volatility does not allow it, at least not for now. If the market does break above, as the market really does come back to life, then obviously our bias will in fact change. But we can still see this level of strong structure. So even on this time, I think on this time frame, we can make a case for another little idea here. Each time frame does in fact have its own markup, right? That's why it's important that we use each time frame to our advantage, because in order for us to really get a strong understanding of the next potential move, we got to make sure everything meshes, everything comes together, meaning that if the weekly says sell, if the daily says sell, the 4-hour, 1 hour, if they're all telling you sells, if everything is coming into conjunction together, then you're probably going to go ahead and want to sell that market. Now, if you start seeing daily buy and 4 hours sell, and maybe you want to go ahead and backtrack, see what initially is really happening. And right now, it does seem like everything is giving us the idea of potential sells. Now, again, I know in the higher time frame, our pattern looks different. The trend line, I don't think is connected here. I think it might be connected a little bit lower, but we can even use this in a sense as well based on this specific time frame. And if we wanted to get a little bit more detailed as far as structure, which I will, because these could be considered target zones if you're looking at actual entries here. So I do think with the essence of gold, we are a nice sell point for us to make some shorts to the downside. I really want to see if this area here does in fact stay intact, if it does not get broken above. I will be looking for strong sells from this area, and I'm gonna leave the markup just like this because I have an idea of the higher time frame already. We were able to see the break of the trend line and the retest of it at a strong level of structure on the weekly. We were able to see on the daily that we were able to even identify based off of this structure, because this was found on the daily. On the 4 hour, we can even go and be in further detail with that level of structure and really see the market tried to break above but could not. It's now resisted above. It's resisted from breaking above, and we can hopefully see some kind of bearish confluence here, being with candlestick patterns. If I start to see bearish variance, if I start to see, you know, any type of candle that shows me that buyers are no longer welcome at this specific level of structure, I'm going to go ahead and look for sells, and I'll be looking for those sells. So my trade will look something like this. And this isn't a perfect world. Obviously, this is not going to be the exact entry price, the exact stop loss and take profit. But let's just say in a perfect world, I did go ahead and place a trade. Please do not go into your MT4s and think that this is like I'm trading this right now, because I'm not. But I would say my stop would be right above this wick, right above these highs here. I always want to give my trade a little bit of room to breathe, especially when you're dealing with structure or a zone at that, especially with gold, because you can see that that will be the entire zone. Why? Good question. Because you can see that the wick here, or the market did in fact reach that point, and it can reach that high once again. So we want to mitigate our loss. So I'll put my stop loss right above these highs, not too much above it. I'll just put it like right above there. And my first level of take profit would be these lows. Now, I know you're like, but what about the trend line? In my true, I would say for me, my discipline is always going to be using my structure as a take profit, never a trend line. Because especially if, let's say you are correct on your entry and this is a strong sell zone, that's probably just going to bypass that trend line and just give you further confirmation to hold to your first take profits. So this will be my take profit 1. And then so on and so forth. My take profit 2s will be at the next level of structure. Now, the great thing about this is a lot of people think, okay, just one entry. Let's say the market starts giving you even further like confluence of sells, right? The market can just crash lower, correct, and then you can find, and again, this is just perfect world. This is, you know, I cannot predict something like this, you know, exactly like, but it does give you these type of moves, right? Let's say you can even identify that level of structure, because you can see there's structure there, structure here, a little bit of structure there. I'll even try to make it a little bit better, and structure here. Let's say if it breaks lower and you get a retest, now you have another entry. This is why it's important we understand the overall market, what it's actually doing, because if we're like, oh, well, it's selling and it's going to continue to sell, where else will it sell from? Now you got 2 entries. Now you got another, same thing, take profit 1, take profit 2. Now you do the same thing. Let's say it breaks below that trend line. Now you got a third entry. See, a lot of people think that when you're using the higher time frames, you're only going to get 1 trade a month. Like, that's not the case whatsoever. If I know, or if I feel, because we never know entirely, fully what the market is going to do. But if I have an assumption, right, if my analysis is telling me, well, this is going to start selling, let's identify each and every point, and then you can start, the market will really look like this. Break below structure. I know now everybody's going to probably see it. Break and retest. Now you have an entry. You do that until it stops selling. Well, let's say here, right? I'll just move this down. And the same thing. You now know the market's going to sell. You keep identifying where it's going to sell from so you can make the most amount of money from there. That's why when people only trade one pair, they're not just trading one entry. They're trading multiple entries because they know the true direction of the market. So that's why I'm a huge advocate of, I mean, if you can identify this on every chart, you have multiple entries all week. You don't have to be nervous, right? Because I know a lot of us are like, is it bullish? Is it bearish today? If it's bearish for, let's say, a month, it's probably going to remain bearish for a while. It's not just going to change up one day. So continue with the market trend. Continue in that direction. But what's good, everybody? I see we got a little bit more people on. But yeah, that's my idea with gold so far. I'll remove this a little bit. But I will be looking for strong sells around this, from this current area. And I'll mark it up in a sense because I will be posting this in the Discord for you guys again. Just so that way you guys have it. So I'll just put this as strong sell area. So obviously these are not trades that we're doing now. I'm getting ready. I'm getting the charts prepared for this coming trade week, if you will. If we even do get some action this week, if not, for next week. And I'll actually leave that as take profits 1, just so that way if anybody does in fact go ahead and use this chart as a sell, you know where my first take profits are, and then obviously my take profits 2. So let's write that down. So if you guys have any questions, if there's any specific markets you would like for me to take a look at, feel free to let me know. I'm taking a look at the chat, so I'm always making sure that I pay attention to you guys, so that way I'm catering to to everybody. I want to make sure that I'm really tackling on things and really talking on things that are relevant, that you guys are actually interested in learning and needing to learn. Because I think that's the biggest thing. Like, what's one thing that, if you needed to know about trading, if there was one thing that could make you successful in trading, if you don't have the knowledge, what knowledge would that be? Like I've always, when I first learned or started to learn how to trade, I think that was one of my first questions of, what's the most relevant thing that I need to learn in order for me to become profitable in trading, right? And for me, that answer was price action, or to understand structure. What would that be for you guys? Can you check GU I have set up for sells? Kelvin Vance, what's good, bro? Absolutely. I'll take a look at Gbpjpy USD right now. But if there was one piece of knowledge, and I ask that to a lot of people, not just in trading, but in life, but in the essence of trading, like what would be the most relevant piece of information and knowledge that you can obtain that you think would help you become a lot more profitable in your trading career? Now, taking a look at GU, my man Calvin, appreciate you for asking. I'm actually going to go into the monthly. So the reason why identify trend, so you would want to learn how to identify trend, Sydney, support and resistance. Okay, got you. So everything I do is basically support resistance. I'm gonna be real. Like, there's no fanciness to what I do. Obviously, I try to keep it very simple, very clean for the eyes, for you guys, as far as educating is concerned. But in the true essence of everything else, like, sometimes my chart do be looking crazy. Like, sometimes my shit will have like a million things. Like, the way I tell you don't have your chart look like that, sometimes I will have to have my chart keep that daily, weekly. Sometimes it does. So, but for you guys, I keep it as simple as possible so you understand the steps, what's really needed, and how to get there. So I think for everything, support, resistance, confluence, that's what I literally go over that every session. There's really, literally every session, that's exactly what I teach and what I go over. And that's how I trade. I mean, that's exactly how I trade. So my man said he got sell setups for GU. I highly agree with you. Now, the reason being is how to identify trend, right? Let's see if we can answer that real quick, Sydney. So this is the one thing that I want everybody to understand about trading. This is not rocket science. This is not a hard concept. All you're trying to do is identify the patterns that the market is leaving behind, and you're trying to take advantage of those little, chinks in the armor, if you will. If I looked at this chart, there's no markup on it, and I was to show it to just anybody, and I asked them to say, what do you notice about this? What's the one thing that you think they would say that it's going down? You don't have to know anything about trading to understand that this market is not, it's not a regular market that somebody would normally look into. If they looked at this thinking this is, let's say they're going to think this is a stock, right? Obviously this is Forex, but they go, oh, this stock is probably not worth it because it's not going up in value. They don't have to say they're wrong in the sense of what they said, but they're also right in the sense of what they said. This market is selling. It's not a stock, but they made the most obvious revelation, the most obvious and most correct answer. It is selling. You don't have to have any tool, no indicator, a guru, a teacher, anybody to tell you that this is very much in a bearish market. So, Kelvin, you're absolutely correct on that. You're identifying sells. We are identifying sells. Why? Because if I look left to get right, that's a high point. That's a lower high. That's a lower high. That's a lower high. It's kind of like an equal high, but almost lower. And look at that, another lower high. No indicator, no guru-ness, no fancy words. We can see it selling. And look at the pattern that the market is leaving behind, right? I mean, if this doesn't tell you sells all day, that's a strong sell. I obviously wasn't trading during this time, so 2008, I definitely wasn't trading around that time. But I mean, it's been selling for years. You are going to have buys, within there. It's going to have those corrective moves and those type of markets at some point. But look at the pattern that it's leaving behind. We're going to look over here, right? Look left to get right. I want you guys to always remember that. So I'm going back in a little bit of time. Actually, I could extend this. Going back in a little bit of time. Structure, break above, retest, break out again, structure once again. Now, I'm actually going to take this same thing. I'm just showing you the pattern before we get to the current market. Because I know a lot of you guys are like, yeah, but that happened before we even knew what Forex was. You're absolutely right. But it's really important we understand every concept. I'm using the same structure, and I'm matching it to this support, and it's the same thing. Break below, test. Another test of structure. I'm going to take the same tool here and put it right here. Again, I'm on the monthly time frame. Why is that important? Because being on the monthly time frame, or the higher the time frame rather, the stronger the confluence. That right now, where we currently are, we are at a level of monthly structure, just so that we can make this a little bit more accurate. We are right now, we have broken through a level of significant support. Actually, I'll do it like this. Break of strong structure. And I'll do right? We have a break of significant, of strong structure, strong support. Now support has become resistance. Why? Good question. Because if I go ahead, where are these little arrows? I keep forgetting. It doesn't matter. I'll just use this. You can see this candle. We're getting rejection after breaking out a level of significant structure. And the opening of this candle so far is bearish. I don't think that we're going to get enough enough volatility to really get a strong close of this. But let's say we get a strong close, a strong bearish close of this candle. What'll end up happening is it'll confirm the longer term idea and say, oh yeah, Gbpjpy is going to absolutely continue to sell. I mean, it's been selling since 2008. Why is it just going to randomly start buying in the new year of 2023? It's going to continue to sell, and it just confirmed that. So let's scale down to a smaller time frame, being the weekly. I'll get rid of everything really quick. Now, I wouldn't say there's really much on the weekly. I think we might see a little bit on the daily, but this also kind of seems like an inverted head and shoulders pattern. So that I would take into consideration, only because if we look for this as a sell and we start noticing buying opportunities, I'm going to say, you know what, let's see what really happens, because we are very much in a downtrend. But at any point in a downtrend, you start seeing a reversal pattern. That's not a really good idea. But I still like the sells. I absolutely still like the sells, because there is no inverted head and shoulders pattern as of yet. But it can absolutely develop into one. I would say when it reaches, or if it reaches these lows, this being the left shoulder, and in order for that market to be considered a actual head and shoulders, I like to consider it that, but like to be really considered a head and shoulders pattern, I like for it to meet the actual left shoulder price or beyond it. If it doesn't meet it, it's just considered to me a higher high and a higher low, and the market's just going to continue to push up. I'm sorry, not a higher high, a higher low. If it comes back down to this level of structure, respects it, and creates a higher high and higher low, that's when I'm going to start looking for my initial buys. But if we get the same respect from here, looking left to get right, because this is the zone that was this is the actual zone here. But again, I don't want my structure ever being that big. I'm just going to make it a little bit more perfect. We can cheat in a sense here, because we can see that the market really respected that level of structure there. I don't want my zones ever that big. That's a little too crazy. So we're going to cheat. We're respecting this resistance point already. So I'm going to leave this structure here, because this can very much be considered a support range. Again, because of that inverted head and shoulders idea. So if I scale down to the daily time frame, that's what I want to see. I'll actually get rid of everything. I'm marking this up so that way you guys can see the steps, see it kind of like everything that I'm seeing, so that way you guys don't get confused and really understand how to follow. Like if you see these things, you can follow them as well. What I do want to see is, because I know in the smaller time frame this might actually be more relevant. Might have to do this on the 4 hour, but I wanted to see if I could do it on the daily. Oh, I can't do it on the daily. So I see that initial break. I'll scale to the 4 hour really quick. Nah, I really don't like that actually. Maybe. So for me, the reason why I don't like this is because as a trend line, my rule of thumb is, and I'll just draw it out, I don't want a lot of space between my trend line, right? So you can see here, there's 1, 2, and then on that third touch, it's actually a break and a retest. I don't like that, right? In order for me, an actual trend line by definition is 1 touch, 2 touch, 3 touches confirmed. That third touch is where it's more of like the stronger concept and idea of actually placing your entry for the buy. I don't want just a break on that third touch in a retest. I don't like that. So I'm actually not going to use that idea. And that's just a rule of thumb. That's by going by doctrine of how to properly use a trend line. I've seen that a lot. I think a lot of people just want to, have analysis that isn't there. If it doesn't follow your rules, stay disciplined, right? Because you see here, I got 1, 2, and then nothing else. There's a lot of space in between that trend line that wasn't met, so I'm not going to use that. I really don't think even right now in the smaller time frame, I would use a lot of analysis. Basically, as of right now, the only thing I would see is just this little ranging consolidated market. Because again, no volatility. But marking it up and really seeing what it's going to do, that higher time frame, that weekly analysis is big. Now, what we can do on the smaller time frame, because we can't really add a lot of trend lines or breakout patterns, this is probably the only pattern that we can use. This is what I would really see on the smaller time frame. This ranging market. Now, if anybody's confused on what a ranging market is exactly that. When the market has no real true trend, this is more like consolidated range, where there's not a range big enough to trade, but you can see that it's still, up, down, up, down, up, down. That's the lack of volatility that we're seeing in the market. Well, rightfully so. Holidays, right? Banks are closed right now. But if we're going to do anything, our best bet would to do this. If you can, let's say this market does reach these lows, you want to get a little risky, you can go ahead and buy, right? Because trading a range is just trading from high to low and low to high. So let's say if you wanted to get risky and you buy from these lows, your take profit is these highs. Now, the best idea is to go ahead and look for your sells when it reaches here. So what we're going to do is we're going to call this sell zone, or sell kill zone rather. So our sell kill zone. Why? Because if this market again reaches these highs, this is a resistance point in what we're considering and hoping for a seller's market. We are now identifying the highest probability sell point, or in regular terms, like just the best entry point, right? If we're going to see this market break above, your next sell point would probably be here. I doubt this, but the reason being is because all that pent up volatility, that thing could just be like, boop, just pop up really quick, meet the most relevant level of structure, because we know this is the highest point and we know this is the weekly structure, and that could still absolutely be met. That's what I have currently, that range marked on the 4 hour. Perfect. You know what I mean? That's beautiful. Now, also mark this up here, because again, if that volatility just, decides to open up, like especially Friday, let's say all this week, this market is just, it just creeps up out the range a little bit, breaks out of the range to the upside. And then NFP comes out and just spikes up to that high. That will be my best sell zone, even up here. So we'll even put prime sell zone. I doubt it'll reach that, but just for the education, and also so that way you guys understand that that's still very much a relevant point. Prime sell area. So even with that, like I really do think that I'll put it over here because it's going to move, and I don't want to miss the candle that's in the zone. So I'll put it right there, and I'll put this right here as well. But I would think that your best opportunity is, if you are going to sell it, your trade would look like this. And we're almost done with GU. So if you guys have any other markets you guys want me to take a look at, feel free to let me know. If there's any questions that you guys have, also let me know. Yeah, I'm here to help. I definitely want to keep these, grow this community, really make sure that everybody's learning how to trade, and keep the automation and everything for students. But I want to at least give back to the community as much as I can, so that way everybody could at least get a helping hand. And this keeps me accountable too, because what I'll be doing is all these trades, all this analysis that I do here with you guys is going to be reflected to legacy students. I want to be making sure that all trade setups are coming, for our auto trader from these sessions. So you guys are just basically getting an insight of what, is to come for them. So I want to grow this community based off of that type of transparency, that type of value, and that type of knowledge. So yeah, I definitely appreciate you guys, and I'm glad that you got the same thing, Kelvin. It just shows that you're right. You're right there. You're like above the rest, if anything. So if I did anything, let's just say in a perfect world, because obviously I don't know where I would actually enter. It really depends on how the market is going to be developing. But let's just say it's right there in a perfect world, randomly, right? I'll have a 50 pip stop loss just above the range highs. And obviously first take profit will still go into proper risk to reward. It'll 1 to 2, because you see I have a 50 pip stop loss, but first take profit will be about 100 pips. And if that's broken, then I'm looking for about almost 500 pips, because it'll reach these lows down there. Now, that's just GU. So I'll leave it marked up like this. As it develops a little bit more, I'll go ahead and identify a lot more. Obviously, if it breaks below the range low, we'll actually be able to identify a little bit further, as far as, maybe we can add that potential trend line. I wouldn't do it now, because as you see, there's only 2 touches, nope, 2 touches, right? 1, 2. If it breaks lower, let's say if it does that, then we could add this confluence, because let's say it breaks, retest the structure and the trend line, and then you can say, I can even add that fib to the mix. We have to really let the market, develop a little bit more to get those type of things. So that's why the chart doesn't have too much analysis on it, but analysis is on it. Wow. Oh man, I'm still hungover from New Year's. Sorry guys. But yeah, the reason why we don't have too much analysis, I keep saying analysis on it, is because it's like, it's really not much. We really can't add too much. I'll actually leave that trend line though, because that could be a deciding factor if it breaks lower. But can I check Gbpjpy? You said sell 15 minute. I don't know what you mean by that, but If you're talking about binary, I can understand that. I'll be doing binary with students after this though. But can I check NZD JPY? Yes, I may. So NZD JPY. I mean, that's pretty self-explanatory too. I think there was, if I'm correct, this was the news that happened with the. I think it was NZD. Or actually, no. If I'm correct, let me check another cross pair real quick. Was that just? Okay, no, that was all yen. Oh, that was all yen pairs. Okay, so I'm looking at, and I'll explain what I'm talking about real quick. I'm looking at this move here. I'm like, was that just New Zealand news, or was that overall just, you know, the Japanese yen news? But I just wanted to see how that was. All right, so again, the first thing I'm always going to do when I'm marking up a chart is scale to a higher time frame. Everybody, please understand that. That is extremely important. You have to scale to a higher time frame. I am not a scalper. I understand how to trade. You know what I mean? Anybody who's doing like 5, 10, 15 minutes, I mean, don't get me wrong, that's very good if you're profitable with it. I know it does take a lot of skill to do so, but that's a lot of risk because you could be going against the initial trend, right? The smaller time frame could look really good, but you don't see on the higher time frame, that shit just broke the strongest structure ever, and it's probably going to continue, right? So I'm going to scale actually to the, I don't think we really need to scale any higher, but we'll do the weekly, right? So I'm on the weekly time frame because, again, I want to understand what's actually going on, what the market is overall doing. What I can see overall is that NZD JPY is pretty bullish in the overall sense, because if we go from these lows to these high or to here, we can see it's been creating higher highs and higher lows. And we can see it's from that point to there. Common sense is just at a higher point. But if I delete everything and we try to understand fully what's going on, we can see a few things. The one major thing, and I'm pretty sure a lot of you guys are catching on to how I would mark this up and trade, strong level of structure or just simply resistance. Trading is not as difficult, I think, as a lot of people chalk it up to be. We try to, wrap it up in a different bow and sell it to people and try to make it seem different. It's really not. It's all the same. This is why I just try to keep it as simple as possible with you guys. You're just trading price, right? So this is why it's called price action. You're identifying the most relevant level of price and the actions that proceed within them. Because at every significant level of price, there's going to be some form of action that's going to tell you what's going to be the next move. What are those type of actions? Well, candlestick patterns. Why do you think candlestick patterns are important? They don't just happen in thin air and just randomly, candlestick pattern. No. Those candlestick patterns are happening at the most relevant levels of price, support and resistance. So if I can understand that, I'm going to identify where I believe the most relevant price points are. I can see that this is a very relevant price point. Why? Because how many candles or how many times did this market try to break above and could not? Yeah, there might have been a little bit, stronger attempts, but where's the market currently? It's down here. So for me, I'm going to identify this as a level of strong structure. Now, I don't put, support, resistance, because I know it's called supply, demand, there's so many different ways of calling it. I'm just calling it strong structure, price, whatever. I can see that we already have a strong rejection from that price. But if I also look left, I can see, and I'll actually just draw the whole zone, and then we'll cheat a little bit for the structure. Right? That's the entire zone. Obviously, I'm not going to have my zone that big. We're going to cheat a little bit. So we know where the price really is, and I'll actually leave it just like that. Now, again, that's not the most accurate leveling of my structure. I would say, yeah, it is, accurate how I would personally trade, but keep in mind, I do understand that this is pretty much the entire zone. Reason being is because we're taking into consideration the low of that wick, and we're taking into consideration this structure here as well. So it's not even just the low of that wick, but I don't ever want my zones that giant. That's kind of crazy. So we'll just keep it literally like that. So that level of support could also be considered a buy zone, because right now this is the type of range that you would want to trade, right? Because a range, again, I'll just draw it out here real quick. you're just trading the highs and the lows. If it comes down to the low, you buy to the high. Comes to the high, you buy to the low. And you just keep doing that until either end is broken. And then when it breaks, let's say if it breaks to the upside, then you know the market is going to continue to be bullish. You're going to, I wouldn't say only look for buys, but continuing to look for buys will probably be your best bet. And then obviously, let's say you did buy at the lows here. Well, damn, look at your beautiful ass entry. And let's say it does come back down to these lows. Well, guess what? You keep this entry and you just place another one there. Now you got two profitable trades in the right direction. That's exactly what you could do here or could have done. Let's say if you sold from these highs here, beautiful. You hold it until you reach these lows. Now, remember what I said. If it breaks below or either end of the structure, what could end up happening is you can actually get a retest here. So let's keep this level of structure there, because let's say NZD/JPY does reach this point. It does in fact get to here, and we break lower, you're just simply going to sell from there. But I do think overall NZD/JPY is going to continue to be bearish. So what I'm going to do is I'm going to scale down to a smaller time frame, being the daily now, because if we're going to be looking at the weekly, the corresponding time frame is now the daily. Again, time frame confluence. You really want to make sure that what you're looking at is in fact true. You can't just say, well, the weekly says sell. Does the daily say sell? Does the 4 hour? Does the 2 hour? Do all time frames correlate with each other? The analogy I always use is like, it's like a kid in class, right? Let's say the teacher asks a question, 10 kids answer, 9 kids answer correctly, and 1 kid's like, nah, I'm good. It all has to match, right? The daily, the 4 hour, everything has to match. That 1 kid just can't be standing out like, no, I'm here. You have to make sure that each time frame is going to match each other. So what I'm looking at, and I mean, I really don't have to give too much of a detailed picture. That's a strong bearish engulfing candle. That bearish engulfing candle, especially from a level of significant resistance, right? I'll cheat a little bit here since we're on the 4 hour. We'll get this a little bit more accurate as far as the resistance is concerned. You can see that the strong bear, whether it's news or not, it happened at a level of significant structure. You can even have an argument for this trend line break as well. This is the type of trend line that I would consider 1, 2, 3 touches, then a break. Now, what's good about this is being on the smaller time frame, we can also identify the structures on these time frames. Again, like I said before, each time frame, it has its own initial individual markup. So if I go here, we can see that it did come back to previous structure. I'm going to just use this line because I know there's a lot of, zones and stuff, but just that way you get the idea of the zone. Oop, I fucked that up. There we go. I'll put it like that, because obviously we could take into consideration the low of this wick over here and stuff. But again, if I do that, it will just look crazy. So, but this would be considered the entire zone, and it came back to retest that point. So what else could we have done for confluence? Well, we had that zone, the break and the retest of that. If we go from swing high to swing low, it also came back to 38.2. So not only did it respect that zone, it had fib confluence. This is what confluence is. That's meaning that you're matching all the probabilities together. Now, remember what I said about price action. This is the most relevant level of price. Now, this is the action. The action is the correction to there and the respect of the 38.2 alongside the price point. And you can see that the market is now breaking much lower. So this point here is without a doubt going to be met, these lows. I'll get rid of this fib as well. Now, what I will do is I'll put a line here because obviously these lows here needs to be broken. Broken to confirm it will reach lows. Perfect, right? Because right now this is the lowest point and it hasn't created a lower low yet. But if this is broken, then without a doubt, the lows here will be met. So what could eventually happen, what you can do is one of two things. I do believe that if it's going to break below here, you can, in fact, let the market reach this point, buy and do one of two things. You can buy and have this be your main take profit, because I do think that NZD-JPY will continue to sell. This would be considered a counter trend trade, meaning that you're going against the initial bearish market, the initial trend. Because I think overall what we'll be looking at is a strong continued sell. But mind you, we're on the daily time frame, and that take profit is 185 pips. So that's not a bad setup. I would keep stop loss just about under the previous lows. I don't know where that is on this. How many? About almost 40 pips. So I'll keep it there. But overall, I would look for either the respect of the structure and that correction. And if you do get that correction and do not buy, which is absolutely fine, your sell entry would be based off of this structure. So you would look for the retest from that point to catch your initial move. I know I said both buy and sell. I'm just giving you both spectrums, giving you both ideas. So I know a lot of people, you guys do trade corrective markets. Again, that's why it's called counter trend trading. You are able to identify at points where the market's impulse is over, and you can trade that correction. So might as well. But let's say if you did sell from here, I definitely would not have my stop loss above these highs, because that's over 200 pips. I probably keep it around my minimum of 50 pips, maybe even a little bit more, just depending on how the market reacts around the range and my entry point. But let's say 60 pips, and then my first take profit is almost 200 pips, or over 200 pips rather. And that's just your first take profit. I do think that if NZD-JPY, and I do think it will continue to sell, your real take profit is at these lows. Now, all I'm doing is marking up. I'm just going over what I believe is going to happen. If anyone's confused and you're like, what is this guy talking about? Let me know. I want to make sure that I'm assisting and really helping you guys develop the true skill of actually trading. I don't think a lot of people are doing this in general at this point. This is why I want to do this with you guys and really help you guys to the best of my ability. So if you guys have any question, I am in fact taking a look at the live chat, just so that way I can cater to any and all needs. But yeah, this is my idea with NZD-JPY. Now, obviously, you're not going to be entering off of the daily. I'm just giving you a strong idea of what I believe is going to happen, because I really don't need to go into the 4 hour and any lower to know that this is just a strong impulse. You really can't do much else and mark this up any further. I think a lot of people would, disagree. Like, you can do so much. You don't want to have so much on your chart, because that's when it starts getting confusing. Right? That's when you're like, oh, well, where do I enter? What does this actually mean? Well, it broke that trend line, but not this trend line. And you always want to understand, okay, the market is selling. Where am I going to sell from? Keep it as simple as that. So, yeah, that's my idea with NZD-JPY. If anyone has any other markets you guys want me to take a look at, feel free to let me know. I'm definitely available. I'll definitely make sure that I look at, everything that you guys have. So, yeah, let me see if there is anything else. I don't see anything in the chat so far. I know there is a delay between like me and you guys with the stream, so I'm pretty sure you guys are like 20 seconds behind what I'm currently doing right now. So I'm pretty sure questions will start popping up or anything in a second. But if for the meantime, what I do actually want to do is take a look at GJ, one of my favorite markets to trade. Oh, well, never mind. So as you see here, I do have somewhat of a markup on this, but I was actually expecting this to kind of respect this low, but nah, I just said I'm out, which is great. I mean, now what we can do is, and I'll just mark this up for myself real quick. Oh, it actually already did that, so. I guess. No, I'll still use this. So I'm going to see if we can get this market to come back and correct, or not just come back and correct, but retest that level of structure. I mean, we already looked at NZD-JPY. We knew that we saw that being bearish. I mean, same concept with GJ, right? This is probably going to end up continuing to be more bearish up until these lows. Not rocket science. This is not difficult. Price, action, right? What's the most significant level of price, and what are the actions that proceed within there? And also, these structure points, they act as like a gravitational pull, right? They act as if, like, how the earth revolves around the sun. If there is no structure, like right now, I know a lot of you guys are like, but this is support. I mean, in a sense, yeah, because it did end up closing there and get a bullish reaction. But the true identity, the true price is here because it had to reach this point to even know that it was exhausted. Because it could have closed down here and then eventually made those highs, but it didn't. It reached that point and said, no, I'm good. It couldn't break any lower. But if we look over here, there's more significant price here than I wouldn't even just say more significant price in the close, because there's some pretty significant price here, but more accurate and I would say more relevant, because if we go from those lows, there's really not that much going on there. But at these lows, we can see it made a definitive decision. So this will be my strongest, I would say, level of structure. So we'll actually put that real quick. I would say strong, just strong level of structure, strong structure. Now, again, the reason why this is important, look at the time frame we're on. We're on the daily. We will be able to sell this for as long as it wants to, up until these points, right? However long it takes, we can sell to that point. Because we know, and the one thing I want everybody to understand is, like, I know a lot of you guys, you'll jump on the charts and you're like, is it buying? Is it selling? What is it doing? What is it doing? We can see that it's selling. It's probably not going to buy up until it gets to one of 2 points. Probably get a respective buy here, right? Because what we're looking at on the daily, that's a strong impulsive move. It's probably not going to correct just out of thin air. It's probably going to want to correct off of a level of significant structure. This being the most relevant next level of structure. It's going to gravitate towards that point, right? So what we can do is, I wouldn't say obviously you can't do anything with it now, but let's say it does reach that point. Again, you can place corrective moves or corrective trades, especially, again, mind the time frame, the daily. Let's say we go ahead and we did buy from this point. My stops will be, let's say, somewhere down here. I'm just going to just put it right there for now. But my take profits, 400 something pips. That's a great trade. Now, the whole idea of this, though, is to continue with the sell. But again, this is why it's important to understand the overall market, because you know you want to sell, but if you could time out where those next buys could be, using price action, using structure, using confluence, you'll be able to get in on both ends. So I do think that we're going to continue to sell, but what I'll be personally doing is I'll actually write it down. We'll look for corrective buys. Because that's I'm not just going to say once it gets there, I'm going to buy, because I'm not. You can't just do that. I will identify how the market reacts, right? Candlesticks. Do they start getting exhausted here? Do they start looking like this, right? Do I get candles at that point that look like this? And the reason why this is the first thing I saw. I know there's a million of them, but that was the first one I looked at. The reason why I'm saying if it gets to that point and I get candles that look like that and they start ranging over here is because that tells me that sellers are tired. They're no longer welcome, and they got tired at a significant price. Now, if the market just says, fuck that, I'm out, and it just breaks right through, then I'm just going to completely bypass those buys, not do anything up until we get to this point. But I think right now, for the majority of all yen pairs, we're going to continue to see these to sell. But if I do see some I would say exhaustion from this point, I'll look at something like this. Buy, take profit, look for sell entries, enter, first take profit, second take profit. So I'm just looking at that because I didn't see anybody else with any markets or questions. So just wanted to take a look at GJ really quick, because I really did. I thought there was going to be a potential trade setup here on the smaller time frame for a corrective buy. But no, the market said I'm out. So yeah, and actually on the smaller time frame too, like, you can't make this up. The market is always going to respect price. It broke through, but it had to come back and be like, yo, did I leave my keys? Oh, okay, no, I got them, and just continued on out, right? I like using analogies so that way you guys get it, you know what I mean? But like, it's always going to respect some form of structure. The market has to revolve around these price points. So hopefully this all makes sense for you guys. But yeah, any questions, any markets you guys got for me, feel free to let me know in the chat. I'm definitely taking a look. Just that way, again, I just want to make sure I'm speaking on relevance, really helping you guys become better traders, and go from there. Let's take a look at US30. everyone's favorite market. I have no idea why everybody likes this. It is like the most, it's like the most popular pair now, or market rather. All right, so not too much on the weekly. This is a market that I really wouldn't even pay attention to on the higher. I mean, definitely pay attention to on the higher time frames. You want to know the overall idea always, but I mean, smaller time frame on this is, I think, probably best. Okay, so I mean, this is almost self-explanatory. Left shoulder, head of the pattern, and we now have the right shoulder. When does market open, bro? Tomorrow. Because I mean, I think they're actually open now because like they're moving. There are some price movements. The market has in fact been moving, but as far as like the banks are all closed. I actually know they do look closed. For some reason, it looked like they were moving. Oh yeah, no, it is moving. This should just change right now. Gbpjpy just literally changed price, but it looks like they're closed because bank holidays. Yeah, are these moving? I'm just paying. I'm looking at AUD CHF. It's moving, but like in mini pips. It should be rather close. But tomorrow, I don't think there's going to be any bank holidays. But in my honest opinion, I think after Friday, because like stated before, Friday we have NFP, and that usually is going to, it usually gives us a lot of volatility, especially for the US dollar, which it affects. But after next week is where you would probably see the best volatility. All I'm doing right now is making sure that I'm identifying what the market can give us. Like right now on US30, I want to see what the market is going to be doing, because come next week, I don't have to be like, is it buying? Is it selling? I have no idea. We'll have everything marked up. We'll have everything, we'll even be watching it develop even slightly throughout this week to really back up a lot of our ideas and to really confirm, like what we're looking at is in fact true. So even with US30, like I don't even think this is open, but I'll look at it so that way I can understand its true essence. And like I really like right now, I really do think that with this head and shoulders pattern, left shoulder, head of the pattern, right shoulder, this right now would probably be continued as a sell. Now, it's not just because we hit a level of resistance. No, there's actually more confirmation to this than I actually expected. So here's a little tip, and we'll go over this as far as a head and shoulders pattern is. And just in case you guys don't believe that this is an accurate or important pattern, TradingView has an entire tool dedicated to it. So in case you think this isn't good, do I trade SMC? Do you trade SMC? I trade price action. So what I would think is, again, the left shoulder, you have the head of the pattern coming up here. Oh, let me actually, that's way too big. So what I would do is identify this. So with the idea of a head and shoulders pattern is it's a reversal pattern, right? And before we even get to this point, because I think a lot of people need to understand the idea and why a head and shoulder pattern even comes about and the relevance of it. A head and shoulders pattern is when you obviously were in a bullish market and the market was creating higher highs and higher lows. Now what ends up happening is that market loses its volatility, right? And it can't create a higher high. It must reach that left shoulder price. That's just me. That's my discipline. Because if I see something like this, I really don't consider it a head and shoulders pattern, because I have seen something like this happen before. It'll drop lower and then push up higher. For me, anytime I've seen a head and shoulders pattern actually reach or extend above but not break, it could break above the left shoulder price, but as long as it doesn't break above the head of the pattern, I like to see that as far as the head and shoulders pattern is concerned. Do you know a good place to learn price action? You're literally in the best place right now. This is exactly what I'm teaching. Everything I'm doing right now is literally price action. So head and shoulders is a pattern found with price action. This is exactly what I'm going over, right? Because you got those higher highs and those higher lows before, but now that market has broken through, cannot create a higher high, is broken below the previous higher high, and usually comes back to respect that previous support low, which also would be considered a strong structure because that's where the market retested the previous higher high, right? So it all aligns. So what you end up getting is the market is now like, you know what? Can I break above? I can't. And you start to see it respects this as its resistance point, thus creating that lower high. But in retrospect, it's just a head and shoulders pattern, right? We're just eliminating a lot of that movement with just identifying the pattern. This is why I always say trading isn't as difficult as we think. A lot of the things have already been simplified. So when you start seeing this in a bullish market, thank you for showing that as well. I have heard head and shoulders before, but didn't really understand it. Got it now though. Beautiful. I'm actually really happy that you got that information. Seriously, I really do. I'm glad that people get value out of these. But again, we're just eliminating all of that extra nonsense. I wouldn't say nonsense is actually needed, right? But with me, with the head and shoulders pattern, there's two entry points for me. There's the left shoulder price entry, which doesn't always happen, but when it does, you enter here. You take your stop loss, you put it right above the head of the pattern, and your first take profit is at the neckline. Obviously, if the neckline is broken, you identify the next level of structure. The reason why I'm going over this is because of the second entry, right? We were talking about the right shoulder entry, but let's talk about the second entry, the entry that I think a lot of everybody else pretty much uses. I like the left shoulder entry more. But as you see, sometimes that doesn't work out because if I would have my stop losses right above the highs, I would have been kicked out and then pushed into profits, but I would have already been out of the trade. Or you can also trade based off of the neckline break. So the structure, the neckline of the structure of the head and shoulders pattern is extremely important, right? So let's just draw that out. We have our head and shoulders pattern. The neckline is extremely important. Why? Because that is the next, that's the market structure, right? This is the highest support zone that this market currently has. And the strongest, so I wouldn't say the strongest, but the current strongest level of structure. If it breaks below that level of structure, it's not just breaking a level of structure, right? It's not just breaking support. It's then creating that lower low idea, which is confirming that buyers are no longer welcome. The head and shoulders pattern has done its job. It has confirmed that, yes, in fact, buyers are no longer here. This is a complete reversal. Your second entry is off of that neckline. You see how everything comes back to just basics, a break and retest of structure? We had to have a whole pattern, a break, this, develop, left shoulder, but all to come back to basics, right? All we're doing is a break and retest. So the second entry would be at that level of structure. Now, why am I showing you that? Keep that visual in mind. Because we go here to US30, we're doing the same thing. Makes sense? Right? We have the left shoulder, the head of the pattern, the right shoulder, and we identify the neckline in that pattern. Where is it? Right there. And where did the market come back to perfectly retest? Here. So overall, I know, I wouldn't say no, because nothing within trading is for sure, but I think US30 long-term will end up to be continued sell. Where's the next level of structure? Look left to get right. That's a long way down. So I do think that with US30, we'll be finding some pretty positive sells. Again, we have the break and the retest of that level of structure. We can actually go ahead and add a trend line for future reference. There we go. Now again, you can break through the wicks of a candle when you're drawing your trend line. You can't just like start breaking through the bodies of a trend line. So I'll actually just draw that here because you never know. The market can consolidate, stay at that structure, then touch the trend line, get more confluence and go from there. But what we can also do, let's say that trend line does not get met, we can go ahead and go from swing high to swing low. And right there at that 38.2. So yeah, I mean, even scaling to a smaller time frame, I'll get rid of the fib because we already know it's a 38.2. We'll keep it funky. Ranging market. Once it breaks out of this range, I believe it'll break to the downside. It'll confirm the true direction of this and tell us what's next. Let me see some other questions. Maybe putting the stop loss a few pips above the head would be the best spot. Yeah, that's exactly what I do. Literally, I put it right above the head and shoulders pattern. You know what I mean? But like what I was saying, like usually, like if I was to place my trade, let's say if I place it here, it does go right above the head of the pattern. That's how it's supposed to be. But I'm saying sometimes that's not always the best case, because if I go here to the daily, and let's say if I did place my trade, in this case, let's say I place my trade here, and I place it right above the head of the pattern, I would have been wicked out in this instance, right? In this scenario, I would have been wicked out. But for me, I wouldn't have my stop loss that high anyway, because this is on the daily time frame on US30. That, no matter how big your account is a lot of money lost, or a whole blown account in general. So I wouldn't even have had it in that. But yeah, in essence, you would keep your stop loss right above the head of the pattern. Is there an equivalent of head and shoulders for a buy opportunity? Yes, it's called an inverted head and shoulders pattern. It's the same thing. Trading is not difficult. The same thing that you could do buying or selling here, you do buying. It literally just, you do this. Ooh, I'm telling you, trading is not hard. I think a lot of people just try to make it sound hard so they sound like a guru. Literally that. It's what happens after a seller's market. You're creating lower lows. You're creating lower highs. You get to a level of structure. The market starts to do this. Can't break above. Comes back down. Break of your neckline. You now have a buy. Break, retest, enter. You're in profits. Literally the same thing. Nothing different. Nothing different. And I'm not saying, and I'm gonna say this, but please, nobody take offense to this. This is me being as honest as possible. I say this to myself every single day before I do anything, before I start teaching and trading for students, before I jumped on this live with you guys. The first thing I always tell myself is use common sense. Everything within trading is common sense. A lot of the time, people always ask, and this is what breaks it to people. Like, damn, okay, yeah, this is really easy. Every time somebody asks me, what broker do you use? I say, do the broker place the trades or do you? They're like, well, I do. Doesn't matter about the broker. Well, it's a common sense thing, right? Because everybody's so focused on what's not important. What's important is literally what the market is leaving right in front of you. The clues. It's always leaving clues. The clues are what happens at level of support and resistance. What happens when it hits a trend line? What happens when you have your structure, like right now, for a perfect example? What happens when, let's say, this is confluence. This is exactly what I mean. Common sense. Don't worry about nothing. Don't worry about nothing that's going to not make you money. Doesn't matter about the broker. Doesn't matter about any trade strategy. Matters about common sense, because everything revolves around price action, right? I have my own personal strategy, right? And I use my personal strategy only in the confines of price action. So for me, the most relevant thing, common sense. I know that a level of structure met with a Fibonacci retracement ratio, it doesn't matter which one, there is no fib better than the next. But I know with confluence that there's probably going to be some type of action here. Common sense. Common sense says, well, that's a sell zone. I don't need anything else. I'm probably going to start looking for sells. You don't want to overanalyze. You don't want to overthink. You want to keep it as simple as possible. What time frames do you usually use? Sorry for all the questions. No, you're good. All of them. As you see, I went from the daily. I've been going from the daily to the. You have to use all time frames, all of them. If you're asking me what time frame do I enter my trades off of, I hate that question so much, because a lot of people always get mad when I say anybody basing their entries, because I know a lot of people do it, like high-end professional traders. But in my honest opinion, they're entering your trade based off of a time frame could be very detrimental to your account, because you're not basing your entry off of a time frame. You're basing your entry off of your analysis. So it doesn't matter what the time frame is. You're basing everything off of what every time frame has told you. Because again, all that has to come together, the confluence, right? What is the 5 minute going to tell me over the 4 hour? It's at the same level of price. The 4 hour candle is right there at 33147. If If I go down to the 5-minute, what price do you think it's at? It's still at the same price. But what I'm getting is overall analysis. 5-minute isn't going to tell me anything until what? Until I reach my entry point. But my entry point is going to be based off of structure, price. I'm not going to just base it off of, 5-minute, 10-minute, whatever. This is the highest point. This is where I want to get in at. That's it. Why? Because this is the best and highest probability for a trade. The market has sold from there before. It's probably going to sell from there again. Why would I also want to get in at those highs? Let's say if we did get in right here, guess where my stop loss is going to be? Time frame is going to tell me that, but my analysis will. Right? My stop loss is going to be so small. My take profit, the 5-minute is not going to tell me that, but this time frame will. The analysis will. Right? And let's say the 5-minute, 5 to 15, no other time frame is going to say, well, this candlestick pattern is stronger on the 5-minute than it is on the one. No. So for me, I'm using all time frames and I'm basing my entry off of my analysis. So that's really important that you guys get that. It's not about which time frame is better, which candlestick is better, what fib is better. Everything. It all has to work together. Everything. That's why it's called confluence. And that's why they say stack your probabilities. You can't just say, well, it's at a fib ratio 61.8. Okay, sell, buy. No, absolutely not. Where is that at? So let's say, and what I mean by that is confluence. You want to make sure you have everything stacked together. Let's say on the daily, you see a high, the market is buying. So you already know you're in a bearish market. Then you go down to the 4-hour and you start seeing the 4-hour confirming that, because the 4-hour is showing you the actual moves, these little higher highs, these higher lows. And then you can say, oh shit, I couldn't see that on the daily, but on the 4-hour, since it's a smaller time frame, I can see that trend line. Now you start getting detailed. So let's just say in a perfect world, I'll actually just do it so that way you guys get the visual. You get that break and retest of structure. Oop. This is where you start saying, well, everything gets put together. You have the break and retest of structure. You have the test of your trend line. You have your fib ratio. Let's just say in a perfect world, it's 50, right? That's what matters. And in each time frame, the daily's telling me it's a buy. The 4-hour is creating those higher highs and those higher lows. When I see and mark up on the 4-hour, I can see that I'm at a level of structure there. Let's say if I scale down to the 1-hour, I start seeing what's called a railroad track, which is basically candlesticks just very, condensed, consolidated, ranging, no more bearish movement. What that means is that the correction is now over, and it's probably going to continue to buy. It's going to respect that area. I don't need to scale to a smaller time frame to tell me that is a buy zone. It is time to buy. I think a lot of people do that is because they want that wick entry, because they want to place a standard lot size with the $50 account. That's the God's honest truth, right? Because we want the least amount of risk, the most amount of reward with no stress whatsoever. If you use proper risk management, you don't have to worry about, oh, I got to scale in at the 1 second so that way I get a perfect entry and don't blow my account. I've been there. I'm telling you, I've been there. So again, all time frames, you must use them all, and they all have to come together. Yeah, true. I have always been told to focus more on higher time frames for analysis and lower time frames for entry. Also quite new to trading, only a few months in. Yeah, that's fine. I mean, with a few months in, you still got I wouldn't say a long way to go. I got the basics and the basic understanding of trading. I would say within the first few months, it didn't take me into a year where I was like, wait a minute, it's just the same thing, you're just doing the same thing over and over and over again. There's really not much of a difference of your approach when you're trading. Obviously, you'll develop more as you get more experience. Like, oh well, okay, I made a mistake there. Let me do this next time. You'll develop that over time. What I would say for you and anyone else who's just learning how to trade, don't be embarrassed for trading on a demo account at all. I have my live account and I have a demo account. I fuck around on my demo account. I always place like 100 standards because I think it's cool to see what that would be, because eventually I will be placing 100 standards. I just like to see what those profits would be. But the reason why I do it on demo is because what happens if I mess up and do that on a live account? That's not cool. You know what I mean? but I want to be able to build that confidence where I could go from, standards, 5 standards, 10 standards to placing 500, 600, 1,000 standards just on one entry or one trade rather. But that comes with time. That comes with developing your skill set. So don't ever feel, nervous or embarrassed to use a demo account, especially since you're a few months in. I would also say is while you're on these sessions, because I will be doing these every day, try to go ahead and mark up charts alongside me if you can. Like have this on the side or on your phone or whatever, and try to mark up what I do too. I know there's not too much on the charts for today. Again, there's really no volatility, so we really can't mark too much up. We can just get a basic understanding, the direction of the market and where we believe it may end up going next. But as far as entries and going on a smaller time frame is really difficult because there's really not much there. But I would say that try to mark up the charts as I go too, because what you'll end up doing is, one, you'll know the tools that you need to use, how to use them, where to find them on TradingView, and just eliminate the noise. Because I think what a lot of people want to see is shit like this. I'm not joking. People want to see strategies that look like this, that look all cool, so they can say my new strategy that I just inherited and partnered up with this new company, so that way we could make this come true. I got a trading. No, we don't want our trading to look like that. We want it to be as simple as possible, because if we want to make it difficult, I can. We can make it real hard. We can make trading the most difficult thing in the world, or we can just use common sense. And I think with being able to tag along trading or just marking up the charts with me in the most simplistic manner, you'll be able to excel a lot faster. My problem has mainly been that I am in a few communities and everyone is trading differently, so it's been quite confusing in what way to trade. Currently, I am learning to master supply and demand. What am I doing now? Basically the same thing. Supply and demand is just a fancy way of saying support and resistance. It's the same thing. It's just people like to be different in a way to give you the next best thing and opportunity, man. It's really all the same. Every strategy revolves around price action. Quarters theory. I forgot exactly what quarters theory was because it's been a while since I've looked at it. But quarters theory is based around price. Elliott wave. Actually, I think Elliott wave is revolved around price as well, but it has its own different way. I think Elliott wave is the only other theory that I don't think is a theory. I think it's amazing. I don't know how to personally trade it, but I think that's the only thing that can get away with like not really reacting or respecting price, I guess. But everything else is really price action based. Supply and demand and support and resistance. You're identifying, areas of structure where the market is going to make a move from price, right? So that's exactly what I do here. I'm just doing price action. You can call it supply and demand. I just call it strong. I just call it structure and price. I don't even call it support and resistance anymore. But every community is going to be different. That is very hard, I guess, to try to find your way. But you'll eventually find it, because it did take me a while to even know that price action was going to be my thing. Exactly, bro. Can you explain the difference between supply and demand and order blocks? To be honest, I don't know anything about order blocks. I don't know ICT. I don't know market maker method. I know price action. So I wish I was able to give you that information, like the difference between supply and demand and order blocks. But again, it's just, so I'll be honest with you. Order blocks is fake. I'm not trying to sound rude or anything, but order blocks. So the idea of an order block is that you're using the previous candle. So this would be considered an order block. And the idea is that the market is going to correct and come into that zone and be a perfect sell from there. No, because also that's how it's considered, I guess. And also an order block is what, when they can see that us retail traders can see when banks or us other retail traders have tons of pending orders and money and liquidity at that area of structure. Absolutely not. You know what I mean? Because this would be considered an order block right here for this that never reached there. You know what I mean? It's hard for me to sit back and say that retail traders can know exactly what banks are doing. And that's exactly what order blocks and all that type of trading really is. Let me see. You said, I'm pretty sure order blocks are just strong points of where people believe yeah, there you go. Big institutions and banks will enter at discounted prices. Structure. Buy low, sell high. Structure. I'm going to sell at the highest point. Common sense. I'm not going to sell at the lowest point. You think I'm going to sell this now? Like just right now, I'm saying in essence, I know GU, we're looking for sells and everything. I'm just saying in true essence, right? In a perfect world, let's say you think I'm going to just go ahead and sell this right now at a low point with no confirmation, nothing telling me. No, of course, common sense. Of course, I'm going to say, well, that's, you know what? Can it reach these highs? You don't need to see if anybody's there. You just don't want to sell at a low point. You want to get in at the highest point, make the most amount of money on the way down. You know what I mean? But that's the same as supply and demand, right? Supply and demand, you're just basically the same thing. Price points. Again, like I trade literally price action, trend lines, Fibonacci, support resistance, candlestick patterns, breakout patterns. As far as supply demand zones, ICT, market maker, I really never paid attention to it. The information I have on it is very little, to be honest, because I've only focused on one thing. And that's not a bad thing, right? Because I think this is another thing too. This might be where you're trying to like on the fence of what strategy. You don't want to focus on 3, 4, 5, 6 different strategies and try to make them into one because they might conflict in your analysis. But as far as being the same as supply and demand, I'm pretty sure there's like a bunch of differences because I know with supply and demand, you got your base drop base, you know, I forgot what the other ones are. See, I noticed like I've looked into it. I've paid some type of information to it, but it never intrigued me. I think it was more confusing more than anything. I've just understood that the market leaves patterns behind and I simply follow those patterns. No, sorry, I meant order blocks are essentially just strong supply zones and strong demand zones, I believe. Quite possibly, you know what I mean? Quite possibly. If you want, you can send me information on it. I'll take a look at it so that way I can break it down for you. But yeah, I'm a price action guy, man. I don't know any of that stuff. So I wouldn't be able to help you with that, bro. I apologize, but yeah, just pure price action. But you see how it's a lot easier to understand this without having to be like, well, I need to identify where the order. No, I know that right now the market is selling, and if it's probably going to sell from anywhere else, it's probably going to sell from the previous structure point. Ooh, look at that. Previous structure point. I understand. I don't need to understand anything else. I know that right now the market is broken below that level of structure, and guess what? It's probably going to continue to impulse lower, and as it impulses lower, it's going to end up correcting. Where is it probably going to end up correcting to? Probably the level of structure that I already have listed right here. So what we could do is allow that market to push much lower. Actually, we could do this. We can identify where this is going to go much lower. We're going to actually go ahead and use a Fibonacci extension tool. Now, what this tool does, it goes and finds it. I'm not going to say accurately, like perfectly, but what it does is we can see here that this is an impulsive move. It broke lower, right? And it came back to correct. Now, this new impulse has started, or is moving rather. We can identify where this impulse will probably end before correcting to the highs here. So what I'm going to do is I'm going to go ahead and find that extension right now because this is actually something I want to identify for Gbpjpy. So we're going to go swing high, swing low, back up to swing highs. So we got 618, 141, and 127.2. So these will be considered, I would say, let's actually look back. Weekly, is there any structure at these points? So the 161 does have some form of structure. Let's see real quick. Does it meet into that zone? It does. Okay. So the 161 is in fact at a price point. So we can actually go ahead and say that Gbpjpy will probably impulse lower to this point before wanting to correct up to the back up here before re-entry. So I just want to do that real quick. But yeah, that's what I do. You know what I mean? Just simplicity. I'm identifying where the market is probably going to end up going and where it's going to be trading from. That's it. I don't care about anything else. If I know that the market is selling, where am I going to place my sells from? And where are the sells probably going to stop? That's what I want to focus on. Yeah, I think I need to stop focusing on 50 million different things and master one thing at a time because I feel like I'm currently all over the place. If you already feel all over the place, you are. And that's not to be disrespectful, by no means. I say that with the utmost respect. But that's just so that way it helps you understand, like just keep it very simple. Focus on mastering one thing, right? There's so many different ways to trade. You think I know them all? No. But can I trade one? Yes. And that's all you need. You don't need to have 20 strategies. You don't need to be the smartest person trading Forex or anything for that matter. You just need to be profitable. So yeah, keep it simple. You know what I mean? Support, resistance, trend lines. Excuse me. Support, resistance, trend lines, Fibonacci's, candlestick patterns, breakout patterns, identifying the trend, right? Knowing what the trend is, understanding market structure, the breaks of structure, highs, lows, higher highs, higher lows, things like that. Like those things will help you get much further ahead than trying to understand what the banks are doing, because we don't know what the banks are doing. That's why, like, I'm not a fan of bank trading, and like there's no way anybody could really determine what the actual banks are doing. And to be honest with you, banks have no idea what we're doing. Like, I think a lot of people say the banks know what they see our accounts. They don't. They actually don't see your accounts. They don't care what Jay's doing or how your stop loss is so close and they'll hit your stop loss. No, they don't do that. They do have large amounts of money to throw into the market to move the market, yes, but they're not just blatantly doing it because there's something called the SEC. You know what I mean? So there's a lot of theories. There's a lot of reasons why I'm not a fan of that style of trading. It really just comes back to this. All those styles of trading, bank trading, derive from one place: price action. Price action has been used before computers were even born. You guys can look this up. People printed out the charts. They would have to keep printing because obviously the charts just move. They would print them out and they would use protractors. What do you think a protractor does? It identifies the angle of a market or the trend itself. If I move this trend line, what is that little thing? An angle, and it even has like a symbol of a protractor. It all comes from price. So, and they would also have to use rulers, not to measure anything, but to actually use as support and resistance, so that way they could block it off and say, well, that's probably the best area. Banks, right? So that's why I always say banks probably aren't doing much different than us. They just do it with a hell of a lot more money than us. How long have you been trading for? And do you have any videos explaining price action in depth on your channel? That's actually a beautiful question. So I've been trading now for 8 years. Is it? Yeah, it's 8 years. My son's 7, so yeah, 8 years. Started a year before he was born. And do I have any on my channel? So I currently don't. I was really focused on like my students. I really wanted to get our auto trader going. Just really make sure that they were set. So I actually stopped not trading, but teaching on YouTube for a bit and creating content. But I just hired 2 new traders. So now there's 3 traders on board, including myself. So they'll be able to really handle a lot of the force and the brunt work while I'm able to educate and really make content. So as of right now, I don't, but I actually am working in making the content for you guys. But what's beautiful about this is I will be here on YouTube with you guys Monday through Friday, every morning basically at 7 a.m. up until 9. So we got about 5 minutes left. And the only reason being is because at 9:30, I'll be teaching and trading binary options with legacy students. I can't trade binary here on YouTube because there is a huge delay, and we trade 60-second binary options. So by the time you guys even get the call for it, we're probably already out of the trade. So I don't want to do that to you guys. So I'll be on from 7 to 9 Monday through Friday. So I'm always going over price action. I'm going to be also explaining exactly why I'm doing these things. All the trades or all the analysis that I'm doing here is basically the same analysis that I'll be doing for the trades that I'll be placing into our auto trader for students. So everything here is going to be transparent, very real time, and can be applicable to your own individual trading as well. So this is all I do, man. Trend lines, structure, fibs, real simplistic stuff. I know at first it might seem difficult, especially if you're only a few months in. But I mean, the more that you're on these calls, and I'm not just saying it because I want people on these sessions for YouTube. I'm saying it because I genuinely know what these sessions can do. This is not a flex, but I've created 6-figure traders just through education. I could bring them on to one of these calls with you guys if you want. I know a few of them jump on in an instant. And it's just based off of teaching, just off of Zoom calls. So what I did there with them is going to be done here with you. So you jump onto these calls, I guarantee you're going to learn everything that you need. I'm from Australia, so it's 1 a.m. here. Shit, don't matter. If you want money, money don't sleep. I have subscribed and will try to catch your live again. I look forward to learning from you. Do you usually trade New York session? Yes, I personally live in New York City, so New York session is the best session for me to personally trade. It's like literally, I'm actually about to go to Wall Street later on today to see if I could rent out an office there, so that way I have a little bit of a bigger operation. But yeah, New York session is where I trade the most. I know it's 1 a.m. for you right now. If you're able to jump onto the session, it's beautiful. If not, you can always jump back on to the recordings. They're always going to be they're always going to be here on YouTube. So even if you don't catch it, then you can catch the replay. And usually during that replay, you're probably going to get definitely a lot of information, but also the analysis will probably still be there. Also join our Discord, so that way, because I'll be posting our charts that were explained and mentioned here on YouTube. I'll also be posting them in the Discord alongside some signals for you guys throughout the week as well. I really want to give back to the community, so I think that's the best way, through education and maybe a signal, once or twice a day. I got you. Give you some profits too. But I always got the automation. I got the auto trader for our students, the binary options. We have something called big lot size signals, where if I believe a trade is extremely good, where there's going to be little to no drawdown and you could risk a little bit more, I'll go ahead and tell students to place a lot more onto it so they make more money. And also they get US30 signals, NAS 100 signals. I won't be putting any US30 or index signals for you guys in the public, but maybe once or maybe once or twice I'll do it. But yeah, I'll leave that for students. But there's a lot of value for you guys, even on the free side, with the education being the biggest. The community that we have there too, the chat, I want everybody to just start throwing out ideas, speak amongst each other, learn with each other, send resources. I really want to build a community based off of just strictly trading and identifying profits amongst each other. So definitely appreciate you guys. I'll join your Discord as well. I appreciate that. I'm a night owl. I'll definitely be back, bro. Appreciate you, brother. And I appreciate all the questions as well. Definitely helped out with the session. If at any point in the future, for people who are watching, if you have any questions, there's any charts that you guys want to identify, please let me know. I'm always going to be available. I'll definitely answer any and all questions that you guys have. But yeah, for one, I highly appreciate you guys back for being back on for the first time in a while, getting this many people on in such a short amount of time, especially since the stream kind of messed up. It was supposed to be way more productive. I had like stream layouts and a starting thing and music. So the production value is going to be 10 times better starting tomorrow. I just, for some reason, couldn't get it to work today. But yeah, I appreciate you guys. Thank you guys so much. I hope everyone had an amazing holiday. I'll be jumping on my binary session with my legacy students here in about a half hour. So if you guys have any questions, feel free to hit me up at any point. If you have me on Facebook, you can hit me up on Facebook. If you have my Discord, you can hit me up on the Discord as well. I'll be more than happy to assist. So appreciate you guys. Thank you guys so much, and have an amazing